Most people get trapped in loans for decades, whether it's your home, your car, or a private loan. It feels like you are just working to pay the bank's interest. But there is a simple, repeatable logic that can significantly reduce your loan duration in many common scenarios, regardless of where you live and what currency you use. Today, I am showing you one of the most effective strategies to reduce the loan duration. And to make it easy, I have built a spreadsheet that does all the math for you. Stay till the end and I will show you how to access it for free. This is Do I Know? Let's make your loan disappear faster. A quick reality check. Most loans work in a similar way. You pay an EMI or equated monthly installment, which is split between interest and principal, your actual debt. Early in the loan, a large portion of your payment goes towards the interest. And the longer the tenure, the more interest you typically pay overall. So the big question is, how do you reduce interest and finish earlier without getting a second job? There are two popular approaches, Snowball and Avalanche. Snowball means paying off the smallest balance first, mainly for a psychological win. Avalanche means attacking the highest interest loan first. In this video, we will focus on Avalanche because most people I talk to want to minimize the total amount paid to the bank. To keep it concrete, let's take an example with two loans. A home loan of 100,000 at 7.5% interest for 25 years with an EMI of 739. A personal loan of 50,000 at 10% interest for 10 years with an EMI of 660. So the total monthly outgo is 1,399. Now the reality is this. Most of us can find small bits of extra cash in different ways. An annual bonus, a tax refund, delaying a lifestyle upgrade, or a salary hike. If we use that money smartly, the impact can be substantial. Step 1. In most cases, you start by attacking the loan with the highest interest rate. In our example, it's the 10% personal loan. Step 2. One simple benchmark is try finding around 10% of your total EMI as extra cash. For us, that's about 140. Instead of spending it on another subscription or a dining out, we add it to the highest interest loan as a part payment. Here is the spreadsheet I built for you. I have entered loan amount, interest rate, loan term, and a start date of February 2026. Without any extra payments, this personal loan ends in January 2036. Now watch what happens. When I add that 140 as a part payment, the end date drops to June 2033. In this example, we just cut about 2.5 years of the loan duration, making it roughly 25% faster, simply by finding a small amount of extra cash. Step 3. This is where the magic happens. Once that first loan is fully paid off, do not change your lifestyle. Take the entire amount you are paying on the first loan, the 660 EMI plus the 140 extra, and roll it over into your next loan. If you are following along the spreadsheet, look at the amortization schedule. By the time the personal loan is finished, we have a remaining balance of 86,483 on the home loan. To calculate the next phase, we update the loan input table. Enter the remaining balance, adjust the start date, adjust the remaining term to match our progress. Make sure the original end date still aligns with your bank's contract, in our case, January 2051. Now watch this. I add a part payment of 800, that's the original 140 extra, plus the 660 we are no longer sending to the personal loan. Look at the new end date, April 2039. In this example, we are finishing the home loan about 12 years early, roughly 48% faster than the original plan. But wait, there are some exceptions you need to be careful about. Number 1, some banks charge a penalty for part payments. If the penalty is higher than the interest you save, it's not worth it. Always read your contract. And number 2, if the loan has only 6 months left, don't bother avalanching it. Most of the interest is already paid. Just finish it normally and move the rollover cash to the next loan. So let's recap the logic. It's a simple 3-step formula. Target the loan with the highest interest rate, attack it with around 10% extra cash, roll over the full payment to the next loan once it is finished. To make this easy for you, I am sharing the exact loan repayment calculator I used in this video. It is completely free, no registration, no catches. Just head to the comment section below. I have pinned the link at the very top. Click it, enter your numbers, and see how fast your loan could finish. Stop paying unnecessary interest and start building your own wealth. If this gave you a bit of hope today, hit like and subscribe. It really helps the channel to grow. I will see you in the next one.